Stocks continue making all-time highs with today, Tuesday, the first day of September. The NASDAQ just up over a little bit under 1%, while the Dow is up a little bit. It's up about a 1/15 of a percent. So stocks and indexes are making all-time highs, but people don't realize that it's primarily because of the focus that the Fed has concentrated on the FANGs, on the Apples, on the Microsofts, on the big tech stocks, and they want to make it look as though retail investors are going to miss out because stocks are going higher and higher day after day, because the Fed is literally buying these corporate bonds of these tech giants. And not only that, but also the way that quantitative easing is portrayed to the general public is that it's inflationary in the long term and deflationary in the short term. The dollar has to pull back, but some people think it's going higher. So there's a lot of constraints that are really based off of what the Fed is doing. We just heard from Powell and the vice chair the other day, last week, about the average inflation target program. And that's basically them testifying to the fact that they will let inflation run as high as it can. Inflation's already taken place tremendously in asset prices, as we're seeing right now. And it's going to take, it already is in some areas, like oil, lumber's up over 100% year to date. Lumber prices because of housing prices primarily. But anyways, today was nothing better. There was no better day to perform a momentum trade. So what I did was I actually got and I did it based off Twitter. Sometimes trading off Twitter, and that's literally momentum trading. When you're trading off, information that's displayed on whether it's media channels or information desks, whatever it may be, some kind of alert system. That is an opportunity for arbitrage, because whether it's you being ultra fast and speedy, and you happen to maybe be an HFT and you can perform algos based on these media outlets and channels and streams, where you could duplicate whatever information is distributed in the matter of milliseconds and be ahead of the momentum bull spike. So that's one way of doing it. Another way of doing it is exploring the price action material. So what I mean by that is going not just in all at once, hoping for the best, hoping it'll reach higher prices, but the point is to grasp a piece of the pie, piece in this case of a range. So I'm going to show you a trade that I made today, my only trade. Let's see, I have to share my screen here actually. Okay, so NAKD was a stock that I traded at around, I got in 9:50 a.m. Small size because I have very limited buying power because I'm primarily in PRPO. I'm swinging that for the midway September. NAKD, it was forming a kind of ascending triangle with considerable amounts of exponential moving averages. That's what all those are. Money's coming in gradually. No PR. It was just because this stock, JILL, was getting pumped too, which actually happened to scalp and essentially break even. NAKD is the result of that spike. And if we look at, for example, the hourly chart, we'll see that 30 cents was a tremendous kind of resistance, 30 cents. And if that beats its demand zone, it will obviously squeeze, which it did all the way to 35 cents. And now is obviously pulling back lower today, which makes sense. It's not a sustainable move higher. So, I'll show you exactly where I got this from. Let me go to Twitter. So this is shout out to Antonio Costa, AC Investor Blog. NAKD volume alert off Jill, could pop anytime soon. Big position. He took a large position. When anybody that's a large influencer on Twitter takes these kinds of, literally 6, 7, tweets in a row within 10 minutes, kind of praising NAKD for this example. Obviously, not only is he in with humongous size, right? He took 100,000 share position, but also the fact that this is a stock. If we look at his chart, and I like it because he has my accumulation distribution as well. If we take a look here, though, right, we said that 30 cents, and he has it too. The 30 cents resistance is huge. If it squeezed over, right, it was forming, it was forming that bear flag intraday, and basically, what we saw was, if we look back at the chart, right here, this is where I got in at 27.1, and it was trying to, obviously people were not understanding what was happening necessarily. But I think what happened was once that alert went through, which is literally 2 minutes or so before I went in, or maybe 5, it was accumulating basically twice the amount of volume it was trading prior. So clearly it had a large influence, those 6 tweets in a row, on the price action in an immediate fashion. And then, of course, we broke with the squeeze as the 9 EMA squeezed towards the tip of the resistance, kind of confirming the breakout of the ascending triangle. It closed over, right, and we just kind of consolidated under prior resistance, current support, and we rode that 9 EMA all the way to 35, and we're kind of fading along the day. So I got out at 31.36. I could have held, obviously, for another 4-cent gain, but that's the thing. You can't time tops and bottoms perfectly. So you have to compensate for that with what your target is initially before even going in it, which I knew exactly what I wanted, and I was very, very happy with the trade. But anyways, these are the kinds of trades, guys. Whether it's Momo based or not, it's all based on what you can find, and it's not even what you can find. It's what the market can give you, what it can feed you every day, and you don't need to trade every day just because it's. This is an opportunity-based system. It's a zero-sum game, as we know, but it's opportunity-based. So when you see an opportunity that meets your criteria, that that meets all these satisfactory requirements that you as a trader has, your principles, then the best way to strategize from there on out is to do your due diligence on the fundamental and technical side, and then getting a relevant, risk-reward mentality along the way. You get to see disruptions in the business. You get to see how those disruptions took place in price action, in the stock chart. And, that's what it's all about, is grasping as much information as you can about these, undervalued and very unlooked at opportunities within, equities, and primarily small caps, stocks in Russell 2K, NASDAQ. These are stocks that are either really, really beaten up, right, for the purpose that they've been pumped in the past, and people are just become bag holders, and gradually they're selling off because either they're tired of holding it and they need cash, or they just need cash. So that's how it works. And those are opportunities known as dead cat bounces, which is a funny term, but it's true, because it's literally, at that point when the stock is trading 200% off its highs to the downside, that is clearly a result of a parabolic move higher that was clearly unsustainable, and we took basically all the accumulated money flow, from the pump higher all the way back down to where it came from, if not lower. So that sequence of diverging from the upside to the downside, or rather converging, basically confirms what I'm saying. And if you think about it, there's basically only 98% of the entire stock market that could be manipulated. The other 2% belong to activist investors, and they have all the control. The activist investors normally have an influential impact in the stock market in the case of trading. For example, the most recent activist news in the worlds of small caps was the acquisition interest of Barrick's Gold by Warren Buffett. And yeah, the price of gold didn't really necessarily shoot off to the moon from that PR. But guess what? The gold stocks did, the gold ETFs did all-time highs. Every silver, gold, every indication is telling us that we're breaking out of a descending triangle to the upside on a higher low status. So it's fantastic. So it's great. And, what we learned from NAKD today is pretty simple, that we need to sustain a system that can, be organized as a plan A. If plan A doesn't work, then plan B. Plan B doesn't work, then you have plan C, D, F, E, F, all that stuff. So it's, because that's what happens normally. It's kind of not normal if things work out for you all the time. It's actually not normal at all. But if things don't work out for you, which is normal, but you're able to strategize and further optimize your strategy based off of those disruptions and and whatnot, then you have a better opportunity, maybe an even more so better opportunity of realizing a larger gain. So it's really up to you and how you strategize and prioritize your trades, and not just going into win or die. That's not what it's about. So with that being said, fellas, that'll be it for today's recap. NAKD is the only trade for today, 1-for-1. Still holding PRPO, obviously keeping an update on that in the Twitter. If you haven't followed that already, please do. Subscribe, please, to the YouTube, just the subscribe button below, and the like button would be very, very appreciated. The like button helps us quite a lot. So please do so, and we will see you very, very soon.